So, of course, Nic, let's talk about the record high on the Aussie. I mean, almost 35,000 points that we're sitting at right now. What do you make of this? I mean, is this level justified?
Yeah, certainly a strong day, Sam. Is it justified? Well, you know, it's interesting if we compare where we're sitting now in terms of, you know, what the market constituents are. So back the last time we hit these records, obviously resources were in a lot stronger position. We've seen a massive sell-off there, and that's been swapped out by industrials and retailers. So, yeah, resources starting to look interesting, certainly some pockets of value there. You know, some of these companies are down over 50%, particularly Platinum's, Anglo American, as you're discussing.
Yeah, I mean, big cap stocks like Anglo American today, much firmer. And then on the other end of the spectrum, in fact, MTN slipping back by 1.7%, 152 Rand. Just some profit taking there. Your thoughts on that? Yeah,
I think so. I don't think there was any specific news. So it's, I mean, it's rallied quite strongly. It's going up over that 150 level. So, yeah, probably a few people just taking some profits.
Let's talk about a smaller cap stock, but I suppose indicative of the pressures small businesses face, specifically manufacturers. Huluman coming out with their numbers today, and headline earnings per share down 18%. And it's interesting to note that they're yet another business in South Africa that is battling as a result of cheap imports. And I suppose that really just hits the bottom line when you've got so many cost pressures for a company like Huluman.
Absolutely, and if we look at Huluman, you know, what was their main competitive advantage? They obviously are heavily reliant on a cheap electricity price to get their rolling stock in. They've got a supply agreement with Billiton, which ends, it's been extended, but ends around the end of this year, I believe. So, yeah, it's a big concern. The only thing they had really was the fact that they were a low-cost producer with cheap electricity prices. We've obviously seen a massive ramp up there. And that's hurt them strongly. So despite the fact that they had the strong production numbers, they're battling, competing against the imports. And one wonders, you know, where to from here? This is a business trading at well under half book value. But you know, what the market's saying is the business can't really generate a sustainable return on its capital. And given the problems, the market may be right in this case.
And you can see it across the board in the numbers. I mean, inventories up, cash being depleted to 8.1 million Rand from almost 20 million Rand in the same period last year. And just across the board, looking at all the numbers, it don't provide you with much to be optimistic about and reason to buy that stock. Would you agree?
Absolutely. You know, at Atlantis, we certainly like stocks that are trading at, you know, low price to books and low price to earnings multiples, but you do get companies that are value traps. They look statistically cheap, but they're cheap for a reason. And I think a business like this certainly is one. The business model effectively has been impaired by the change in electricity prices. So we'd be, you know, we haven't liked it for a while, and certainly the market hasn't liked it either. It's down significantly from over 10 Rand down to, you know, we're 4 or 5 Rand. So, yeah. Not a business that we'd like to invest in.
Nic, let's talk about the banking sector because, you know, we're still taking a look at some of the commentary from Maria Ramos around the ABSA results, trying to understand why they didn't take enough provisioning. And it looks like, you know, in terms of their provisioning for that area that was a problem, the legal book, they've increased it by R1 billion this time around. That takes it to around 23% of the legal book. The stock is down today by around 1%. Looking at the numbers and looking at what the Maria Ramos had to say about why they were hit, do you have any confidence in ABSA at this point?
Yeah, it is rather concerning, you know, the broader picture of how did they get it so wrong compared to their peers. And we look at Nedbank. Nedbank's results are coming out on Wednesday. You know, their profits are up. They've already guided up around 25% plus. So compare that to ABSA, and one can understand why the market has punished them quite significantly. And, you know, the banking game is all about confidence. So the question is, you know, was this a one-off, or are there some larger overriding management concerns? And when one looks at all the management and adds that into the mix, it is rather concerning.
And of course, then on the other end of the spectrum, you've got a stock like Nedbank, which has performed really well this year. And we're seeing that reflected, I suppose, in the earnings as well. We're expecting earnings out this week. So the next big bank to report, they have advised that earnings will be 21 to 26% stronger. Your thoughts on Nedbank? Is it a bank that is turning around right now and catching up kind of the lost ground that it has had over the past few years?
Yeah, and it's been quite an unpopular stock, and it looks like they have turned around that troublesome retail book, and you're seeing it coming through in the numbers now. Look, a lot of that probably is in the price. The stock did rally after their trading statement, so the question is, just like ABSA wasn't quite as bad as their trading statement said last week. We'll have to see what happens with Nedbank. But yeah, if we get a strong set of results there, no doubt it'll give investors a bit more confidence that the broader banking sector is in healthy shape, and it was just more of an ABSA one-off that scared everyone a little bit.
Sorry, Nick, very quickly before I let you go, Hoskins consolidated, indicating it's looking to spin off some of its assets and form a new investment vehicle called Niveus and list that. Your thoughts on that restructuring?
Yeah, we think it's positive. We like the stock a lot. It's trading at a significant discount to net asset value. Most of the value is their stakes in ETV and Soga Sun. So the spin-off isn't a massive amount from a valuation perspective, but what it does show investors is the fact that management are looking to unlock that value. And if this is the first step, we may see some further spin-offs. There have been rumours talking about them spinning off perhaps their Soga Sun stake. And if they do something like that, you could see the stock rally significantly, because there seems to be quite a lot of value trapped there.
Yeah, and the stock actually fell back today after that news was released. Thank you so much for joining us today. Nic Norman-Smith, Chief Investment Officer at Lentus Asset Management, joining us.